Hi, JJ here with The Art of Value. This is veteran investor Jeremy Grantham talking about the current bear market. For reference, he's talking in July 2022.
The first half of this year is about as fast as stock markets ever decline. I remember seeing that the first 4 months was the fastest decline in the S&P since 1939, when I was 1 year old and they were preparing for World War I. So that's a pretty good excuse to go down. And this was the fastest decline. This is about as fast as markets go down. And they always have good rallies. There's nothing as quick and spectacular as a bear market rally. They had one in late 1929 to early 1930, an absolute doozy of 45%. And of course, with historical hindsight, they signify very little, but at the time, they frighten the pants off the bears. And they give hope that all is over, all is forgotten, and it's back to the races. And I suspect we may very well have a pretty decent bear market rally as we sit. I wouldn't be surprised if this went on for at least another month.
So Grantham obviously thinks we're in a bear market rally right now that could end relatively soon. By the way, he was talking on the Investors podcast, which I'll link in the description below. It's a much longer interview. So in this next clip, he talks about how long he thinks the bear market rally could go on for and how low the S&P 500, the market benchmark, could go down when it goes back down again. Just before that, I'd like to ask you, if you're not already, to subscribe and follow The Art of Value to get more on investors and investing. All right, here's Grantham.
The entire bear market, it would be unusual for it to bottom out anywhere near this high. I would expect that by the low, that the S&P would have declined by 50% from the peak in real terms. So you do have to adjust the stock market for inflation. And also the trend. The trend in the market is a little over 4% a year. And as time passes, you should put that into the fair value. So a year from now, when the bear market might end, the trend line value would be almost 3,000 on the S&P. Of course, there's no rule that says you stop at fair value. Typically, in previous big bubbles breaking, they go down below that. They went down below, of course, in the housing bust of 2009. And they went down in every great bear market break, they went below trend, except Alan Greenspan's specialty in 2000.
So he thinks the market could go down 50% from the 2021 peak, which is more than as it stands today. And it could go until mid-2023, so almost another year from where we are now. So in the next clip, he talks about the 2000 bubble, and he says a comparison with that. Let's hear what he says about that.
In 2000, the S&P was heroically overpriced. It came down 50%, but at 50% decline, it was only fair value. It only hit the trend and then bounced as the Fed raced to re-stimulate. The NASDAQ went down 82, and that's a lot of pain. And it's possible that would do that again, but you do have to adjust for inflation. There was very little inflation around in 2000, but this time, with inflation running at 8 or 9, it does move the nominal value of the S&P upwards, and one shouldn't lose sight of that.
Wow, so he thinks we could have a repeat of the tech bubble, the 2000, otherwise known as the dot-com bubble, where the NASDAQ went down over 80% and the S&P 500 eventually did go down more than 50. That would be quite something, and so this bear market rally means it would take definitely a big dive from where we are today. So in the next and final clip, he talks about how he thinks the deflating bubble started in early 2021, not in late 2021 when the indices started going down. There was a lot that went down before that, and he thinks so. It's been going on for more than 18 months already.
In January 21, the number of new issues peaked. In February, the outperformance of the new issues peaked out, and in February also ARK peaked. ARK, a exchange traded fund of about 30 growth stocks that are very early stage growth. Most of them had no earnings. So that was exactly where the termites would be expected to go to work. And then a month or two later, the meme stocks with little or no earnings, like AMC and GameStop, they peaked out. And the whole Russell 2000, although it technically peaked in November, by early February of 21, it was about the same. It plateaued for over 10 months, almost 11 months of 21 before going down. So they had been rolling over, and 40% of the NASDAQ before December 21 were down 50% or more. So anyone who was into deep speculation knew very well that the bubble had started to lose air long before the end of 21.
Yeah, so he thinks the bubble started deflating in early February 2021. Makes sense. I've looked at the graphs, and that's when ARK did start tanking and kind of didn't stop from there, and a lot of others have gone down 70, 80, 90% from there. Right, that's it. So thanks for joining me today. Don't forget to subscribe and follow, and I'll see you next time.